So today we are going to go over some of the basics for medical insurance, as this is around the time for open enrollment for a lot of people. I'm going to try to go over some of these things so that it's as simple as possible to understand. And that way, this is a base level to help someone get started with understanding how insurance works and just which direction to go in. So the first term that we have is premium. Premium is the amount that you would be paying out of your check to contribute to your medical plan. The next word that we have is deductible. Now, deductible is the dollar amount that you would have to pay before your insurance company would contribute towards the bill. For example, if you have a deductible of $1,000, you need to accumulate $1,000 worth of medical expenses under your insurance plan before your insurance would then cover any dollar amount after that, depending on your plan term. The next term that we have is co-insurance. Co-insurance just means co is two, so together, you and your insurance company are going to split a percentage of the bill. So, for example, your insurance company may contribute 80% co-insurance while you're responsible for 20% co-insurance. So that means if your bill is $100 for a medical visit that's covered under your plan, you will be responsible for the $20 of that bill because that's 20%, while your insurance company is responsible for the $80 or 80% of that bill. Copay. So we hear that word co again. Copay means together. So that is a flat rate dollar amount that you would be responsible to cover for that bill. Anything above that dollar amount, your insurance company would then cover. Out-of-pocket maximum. So out-of-pocket maximum just means that this is the ceiling, the top amount that you would pay covered under your plan for either in or out-of-network benefits. So depending on an example, if you have an out-of-pocket maximum, that means between your deductible, your co-insurance, and your copay, if you have any of those, the maximum amount that you would be responsible to pay is that $5,000. Once you reach the $5,000, your plan would then be covered at 100% from your insurance company. But again, make sure you're checking into your plan specifics. The next term that we have is in and out of network coverage. So what that means is if a provider is considered to be in network, that means that that provider is contracted with that health insurance company for a set rate for that specified visit. And so typically that is why those in-network benefits tend to be better than the out-of-network. The out-of-network means that that provider is not contracted with the insurance company and can charge whatever amount they deem appropriate. Specialist. So a specialist is any provider outside of your primary care provider. Your primary care provider may also be mentioned as PCP, which just is the abbreviation for primary care provider. Visit limits. So those visit limits are just limitations for how many visits that you are allowed per plan year or sometimes per lifetime for that specified service. For example, you may have 30 visit limits per calendar year or per plan year for physical therapy. What that means is you are allowed to see your physical therapist for treatment for the 30 days for that plan year. Once you exceed that, or once you reach that amount, you would then either need to wait until your plan resets, or some plans have the option where they can request more visits if it is deemed a medical necessity. But that's another video. Okay, so next we have FSA plans and HSA plans. These are plans that are pre-tax dollars that come directly from your paycheck, and it goes in funds health accounts. So those funds can be used to cover the medical expenses that you accrue for medical bills or medical supplies and things of that nature. So it's important to note that the major difference between an FSA plan and an HSA plan is an FSA plan does not roll over. Whatever amount you contribute, you need to use all of that during that specified time of your plan year or calendar year. After that, whatever funds are in there will be lost. So remember, you have contributed into this plan, and your employer may have contributed a small amount, but whatever funds are left there, you will lose it. An HSA plan, those funds will roll over, and even if you no longer have that insurance plan, that is already accounted for, and you will be able to use that for as long as the funds are there. You can utilize that for yourself and or your dependents that are covered under that account. It is important to note here that with those FSA and HSA plans, certain things outside of just the doctor visit bills may be covered, such as medical supplies, band-aids, things of that nature. There is an FSA store that sells FSA approved items on there. And so if you're going to come to the end of the plan and there's going to be funds still remaining, you may just go ahead and purchase those items so that you can utilize the funds so you don't lose out. So now that we understand what a deductible, co-insurance, copay, and out-of-pocket maximum is, I'm going to give two little examples so you can see how it will work in theory. Typically, if you are having a deductible and co-insurance, you don't often have a copay to go with it. So I'm going to give an example with the deductible and co-insurance and then with the copay. So in this example, let's say that I have a $1,000 deductible and I have the responsibility of a 20% co-insurance, and then I have an out-of-pocket maximum of $2,000. So, okay, I go to the doctor, I have been paying all of my bills, and now I have reached that $1,000 mark. So now after I reach the $1,000 mark, I will then be responsible for 20% of the bill going forward up until I reach the $2,000 amount. So now you may wonder what happens if, let's say you are at $990 left of your deductible. So you have $10 left before you reach your deductible, and how would that work? So what it would be is that you would still be responsible for that $10 difference of your deductible, and then the remaining balance of that bill, you would be responsible for 20% on top of that $10. So that's how you would meet your deductible and then still cover your 20% responsibility of that. Once you reach your out-of-pocket max of that $2,000, you have satisfied those requirements and you shouldn't have to come out of pocket. So long as you are within your specified agreement terms with your insurance and it's in network and whatever your terms are, you shouldn't have to come out of pocket for the rest of that plan year or calendar year. Now, in the second example of the copay, so typically I wouldn't have a deductible. So if I had to pay my copays, and let's say my out-of-pocket maximum is maybe $500, so I would be going to the doctor and responsible for my copays, and it's going to vary depending on the specialist and the visit type. And so let's say I've just been accumulating it. I've reached my $500 worth of expenses. Now I am no longer responsible for the finances, again, depending on the specifics of the plan. So I hope that would help clear it up if you were wondering how it would work with having so many of those moving pieces and financial numbers and portions of what you're responsible for. How do you pick a plan that's best for you? So I like to tell people that you have to determine on what your needs are and how often you see the doctor, how often do you need medication, treatment, and that kind of thing. So there are typically three different options when you come to purchase your plans, but whatever limits there are, maybe you have more, maybe you have less, there's going to be an option that you have where your premium is going to be lower. In the event that your premium is lower, those plans tend to have the higher deductibles. Those are where you would be coming out of pocket more on that end of you're going to be more responsible for a bigger portion of the bill, or you're going to be paying out more before the insurance kicks in. And so the benefit of a plan like that would be if you're someone who is typically healthy and you don't need to go to the pharmacy to get medications a lot, and you're just the type of person to go for your preventative appointments, which in most plans those are covered at 100%, and so you wouldn't come out of pocket for those. But let's say maybe you go to the urgent care or you go see an ENT because an issue came up. For those, I would recommend to go with the lower premium plans because you do have the option to purchase an HSA or FSA under those higher deductible plans to help offset the cost of what you would come out of pocket with. But even if you elected to not contribute to those plans, you can still pay out of pocket for those visits. And that is often a lot cheaper, even still, than going with a higher plan if you're someone that's typically healthy. Now, if you're someone that is, prone to illnesses or have pre-existing conditions and, in and out of the doctors often, or you have, maybe diabetes and your prescription is really expensive, you may elect to go with a plan that is going to cost you a higher premium. But then on the other end of that, the cost that you would be responsible for to come out of pocket for those appointments and for those prescriptions are going to be a lot lower. So you just have to kind of decide on which one makes better financial sense to you and think about what your life looks like. If you have any dependents, what that looks like for them, because whatever you elect for yourself is the same coverage that your dependents would receive as well. So it's not like you can choose, a lower premium for yourself because you're healthy, but maybe your spouse or your child is not healthy and they go to the doctor all the time. So you want a better plan for them. It comes as a package. Okay. So I just wanted to go over as well, touching back on the deductibles. With the deductibles, there is usually an individual amount if you have other members added under your plan, under the dependents. So there's usually an individual amount, and then there's a family amount. And sometimes those are combined together. You have to look at the terms of your plan specific, and it usually breaks this down. So this is just kind of a generalization to get you to understand what all of this means. And so what it means is the individual. Let's say, for example, you have a husband and wife and a child. And so their individual deductibles might be, let's say, $1,000 each. And now for their family, which means that all of them combined, their deductible might just be $2,000. So what it would be is that each of them would be, once they go to the doctor, they will be contributing towards that deductible worth of payments. So whichever comes first, so one member might reach their $1,000 deductible, but if you haven't reached your family deductible of $2,000, the other two would still continue to pay towards their deductible. And up until a total accumulative, as the family, you reach $2,000, then that $2,000 deductible would be met. Keep in mind, most plans would allow for your out-of-pocket maximum to cover all of the expenses that you have paid throughout that plan, anything that has filtered through your insurance. This does not cover things that you paid cash for, self-pay, and you did not file a claim so that that can be processed under your insurance. It is also important to note here that you are only eligible to apply or make changes to your insurance plan and selections during open enrollment, with the exception of a qualifying life-changing event. And so what that means is if you get married or if you get divorced, if you give birth to a child or adopt a child, if you have lost insurance from another form, like if you're covered under your spouse's job and then they stop working there, so you had loss of coverage. And lastly is death. So if someone dies while under your coverage, you can make those changes. And those are the only times that you would be able to go in to make the changes. So this is why it's good to think about these things and plan for the future so that you can decide what's going to be the best plans for you, because you're going to be stuck with this plan for that plan year or calendar year, whichever terms are specified within your selections. Okay. So this is just a reminder and a kind of a recap to go over some things that may be helpful to know now that we understand the terms. So your plan will reset every year. So that means whatever dollar amount that you have contributed to is going to restart the first day of your next plan year. So what that means is if you have met your deductibles and you've met your out-of-pocket max and you have not been spending money, that is going to change starting the first day of your new plan year. So you would start all over again and your terms may be different. Your deductible may be higher. Maybe you have higher copay. So it's important to just review it every time you make a selection, even if you're going to keep the same plans. Always review it just so that you know what you're signing up for. Annual visits are typically covered at 100%. So when you go to the doctor for your physical, or for women for their well woman visit or a mammogram, those type of things are typically covered at 100%. And what that means is, even if you have a deductible, even if you have a copay, co-insurance, regardless of what your financial responsibility may be, typically those annual preventative visits are covered at 100% under your plan. So deductible not met, not a problem. That should still be covered under your plan. Again, review your information to confirm that this is accurate. All of the details for your plan will be broken down so that you can see exactly the things that I'm mentioning, to go over and understand and compare the different plan options so that you can see what's the best option for you and your family. Once you have selected your plan and your plan is active, if you have any questions as to what's covered or what's not covered, or maybe you forgot what you selected for, you can always either go online and create an account and look at what your covered services are, or you can contact member services by calling the number on the back of your card, and they will be happy to go over any of your plan information so that you can understand what may be your financial responsibility going forward. It is also really, really important to note that under certain plans, you may need a referral before seeing a specialist. And so what that means is you have to see your primary care doctor first. Then they have to give you an order or prescription to see said physician so that you can get that treatment and have it covered by the insurance. In most cases, if you needed a referral and you did not obtain one first, the insurance company will deny the claim once they receive the billing information from that specialist if they do not have that referral on file. And then you would be 100% responsible for that visit. That is very important to know if a referral is required first before seeing a specialist. And it's also important to note that there are times where you need pre-approval or pre-authorization to receive certain procedures or certain treatment. And what that means is the insurance company would like your physician to send over documentation to show why such treatment is medically necessary for you to have. And then the insurance company will decide if they're going to go ahead and approve that treatment or not. If you do not receive that pre-approval first and you go ahead and receive the treatment, the insurance company will deny the claim. Again, insurance is here to make money. So any way that they can get out of not having to pay your bill is better for them. So these are just extra tips to keep in the back of your mind when moving forward and handling and managing insurance. So I hope this video was helpful to you. If you are still unsure or have any additional questions, feel free to leave a comment and I will be more than happy to help. This is not advice on what plan you should get, but this is just a helpful tool so that you can make the best decision for yourself when choosing what plan is the best option for you. Thank you for being here. If you have not already, please subscribe to my channel and support. Thank you so much and have a great day.